Hello and welcome to another update video on ADA. Yeah, the ADA chart has not really moved much in the last few days. We basically simply see sideways consolidation here, sideways corrections, with an overall pressure here still to the downside in this wave 4 correction. I am tracking here this fourth wave to the downside. Well, the fourth wave is not to the downside. The fourth wave is actually this triangle pattern, which started to develop already in December. When the price started this fourth wave, we have an A, B, C, D, E structure here, absolutely. And I can label this, I can label this an E wave. And the E wave is basically the last leg of this correction, ideally. Okay, ideally. And if that really is playing out like that, then we should soon see the beginning of the next leg up, the fifth wave. But I want to talk to you in this video about the microstructure and what are the relevant invalidation points. What are the levels that now need to hold? Well, if we track this decline here as a so-called WXY structure, that's basically the last leg of the triangle, as I said, is the E wave. If you follow our channels, then you probably know that an E wave is kind of the last leg of a correction, of a triangle correction, of a triangle sideways consolidation. And basically an E wave can take many forms. An E wave can be, for example, a triangle itself. Now, I don't necessarily think that applies here. Triangles are rare enough. That is one of the scenarios that could apply. An E wave can be a normal ABC structure. It's a very simple, normal form of a correction, ABC structure. Could also be a WXY pattern, which is what I'm tracking here. And the WXY structure consists of basically 3 waves in wave W, 3 waves in wave X, and 3 waves in wave Y. And these are so-called complex corrections, so-called 3-3-3 patterns. So the idea would be that we are in this Y wave to the downside. And you see the blue zone on the chart, which starts at 55.5 cents. That's the 100% extension level. And I'd like to see the price eventually here get into this region around 55 cents or even lower. In this E wave, at least, again, we have to consider, when did the triangle start? Already December, January. So most of it is likely done. Yeah, we're talking maybe about the last few bits here, last few bits and pieces. And that would be ideal, because if we go much lower than the blue box or even max out the box, then we will see invalidation of the triangle. Might be a bit difficult to understand, but we have to consider what are the actual invalidation levels of the actual triangle we are tracking. So the triangle is just a correction consolidation pattern, non-directional, which means it will not tell us in which direction we are going to break out. That would be easy. But it's important to understand what is the overall context. So we're using the overall context, which is still bullish, potentially, carefully bullish, cautious. Yeah, and it tells us that if we get a break below certain levels, there will likely be invalidation. And the invalidation point for such a triangle is the low of the C wave. Yeah, so the previous swing lows. Here, around 51 cents from April and from February. So I've been tracking that with you together over recent weeks and months. And so far, we're still holding above that 51 cent levels. Basically, the analysis has remained consistent since February. I think that is when we talked about the triangle for the very first time already in February. So there is currently no change. It's still a triangle pattern that I am actually actively tracking here. And so there is no change to it, and there is no need to change the analysis as well. So tracking the last stages of a triangle can be challenging because we need to focus on the microstructure. So if I go to an even smaller time frame, then you will see that we're likely here in the late stages, and the wave Y to the downside is an ABC structure. The C wave is a 5-wave move. And I've been highlighting over the last few days that this here could be an ending diagonal that's forming. There are surely other interpretations. The smaller you go, the more, I don't want to say the more uncertainty you have, but the more volatility and the more fragile the patterns are, because you have a lot of combinations of different patterns that could apply here. But the nearest resistance area for this direct move down is between 60.9 and 63.1 cents. So I'm tracking an overall local downtrend still. We need to hold below 63 cents to keep the direct pressure down. A move up would require a reinterpretation, but honestly, yeah, I mean, it might then just be a slightly different interpretation, but this would fit quite well. We might move the resistance then a little higher, but I would say to keep it simple, if we break above 63.1 cents, then the focus will shift to the next swing high, and a break above that would simply tell us that, yeah, the bulls seem to make a comeback. A break above the first resistance is like first heads up, and then if we see a break above this green line at around 65.6 cents, then we have better confirmation that the bulls are trying to take the lead. But is it going to be a substantial breakout? That's a completely different question. That will require a decent 5-wave move up, and there is nothing visible like that at the moment. So for now, pressure is downward, but obviously we'll keep an eye on the sector. Most coins are still moving in sideways structures, especially Bitcoin. So monitoring what the sector is doing right now as well, but there is no bullish confirmation yet. That's the update on ADA. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.